What's going on, guys? Let me do this quick little recap on the Apple long play that I took. Again, this is a scalp. This market, especially over the last few days, is not ideal. We're not really getting a ton of follow through, and right now there's a lot of uncertainty in the market. So any little presidential talk, any little Fed talk, any news headline is going to sway this market up and down. Big macro picture, the triple Qs, which is predominantly the stocks that I trade, your Googles, your Amazons, Teslas, so forth, right? All of those stocks are going to be correlated to the triple Qs. So that's the index that I follow. I don't really follow the SPY just because it's 500 companies. There's a lot of companies in there, from financials to oil to big tech to so forth and so forth. I don't really follow the Dow just because, you got your McDonald's in there, your what is it? I think it's Home Depot. You've got some big banks, JP Morgan Chase, Goldman Sachs. So I'm not going to really follow the Dow index. And then the IWM is all small caps. So none of the stocks that I trade are small caps. It has nothing to do with it. So whatever the IWM is doing has no correlation to whatever the triple Qs are doing. So just to kind of get into this, this is a cash flow market. And what I mean by cash flow market is if you do get a move and you enter into a play and you have the idea that you're looking to scalp and or day trade, you have to be okay taking profits when you get them, because at any point in the time of the day, the market could pull in. You can get a news headline, you can get some sort of speech going on. Anything can cross the airwaves and sort of reverse the market that is going in your favor. So if you're playing long and you get something that goes against you, think the market can pull in. If you're shorting the market and the futures want to ramp up, it can reverse direction. So as soon as you get into these plays, you're looking to take profits a lot sooner than you would if the whole entire market was strong and we're trading over the 5 and a 10-day moving average on the indexes. So being that yesterday we lost the 20 period moving average, which is the 20 SMA, that's a pretty big level on the triple Qs. Today we did have a little bit of a bounce higher on some stocks. Some stocks gapped down. Like for example, Aapl gapped down after being extremely strong yesterday, touching 170.28. So I already knew that we had a little bit of a gap down. I was holding a couple of puts on Aapl overnight, closed those out as soon as the market opened, just to kind of secure those profits. That way, in case we did bounce, I didn't want to get caught up in losing any profits. So just to get into this scalping play. So very, very simple. Again, I'm going to use the 5-day or the 5-minute time frame. I'm going to put the 20 period moving average on my screen. I also am going to have these made out trend lines that I'm drawing on here, and I'll kind of go over what they are. So the green one here is previous day's high. Obviously, if Apple breaks previous day's high, it's extremely bullish. I'm looking to play long. Okay. I also have mapped out here pre-market high and pre-market low. So pre-market low on Apple is $157.79. I would be looking to short Apple below 157.79. So what I would need to do is I would need that 20 period moving average underneath 179. Okay. I would be looking for a 5-minute close below the 20 period moving average. And it would help if it's underneath 157.79. And then I would look to take short, because if we lose pre-market lows, then you would expect we would have more room down. So being that we did gap down on Apple and 170.28 was the highs yesterday, we had a long ways to go before we even got over over yesterday's highs. So the probability of taking a day trade on Apple going long to retest 170 is a very, very slim chance. However, I was going to look to see if Apple can hold pre-market lows, which we did here one time at 6:30 in the morning, right off the bell. We did come down, we touched it, we kind of bounced back up, kind of closed over the 20 period moving average here. Again, remember, with this strategy, I am not going to take any plays within the first 5 to 15 minutes, just due to the fact that stocks go up, they go down, they're breaking all sorts of levels. I don't want to get caught in any fake outs. I kind of want to let the market digest, and I want to let the market do its thing before I take my plays. So normally I'm looking to take these plays after 7 o'clock. If the opportunity presents itself. If it doesn't present itself, then that's okay. I just go ahead and look for another stock. if I do get an opportunity to get into a play and it fakes me out, I have to just kind of cut the play if it goes against me. So in this case, I would be looking for Apple to potentially bounce today because we did hold pre-market lows. Okay, we did not close below pre-market lows. So I would be looking for a setup to go long. So what I'm looking for here, I kind of put these arrow indicators on here. These green arrows are going to show you every single time that Apple has closed over the 20 period moving average. So at 7:55 in the morning on Pacific Standard Time, 7:55 in the morning, we do get this close over the 20 period moving average. And we do get it here as well at 7:20. I'm going to show you the difference between these two plays and why I took this entry and why I did not jump in long here. So starting with why I did not jump in long here. Anytime I'm looking to scalp long or short, I'm looking for the previous candles before this entry candle, okay, or before this candle that closes above the 20. I'm looking for at least 3 to 4 candles, closing on the other side. So if I'm looking to play long, I want at least 1, 2, 3, 4. I want at least these 4 candles to be underneath the 20 because I want a clear sense of change of direction and change of trend. So if these 4 candles here were all trading below the 20 and then we get this first candle close over the 20, I would be looking for the following candle to pass this candle, which is confirmation, and I would be looking to enter on this candle. Okay. This play does not go with my strategy because it's not trading under the 20 period moving average. However, 7:55, we get another setup where we close over the 20 period moving average. And if we just take a look, we have 1, 2, 3, 4, 5. 5 candles were all closed below the 20 period moving average. So this is 5, 10, 15, 20, 25 minutes worth of price action. That's all below the 20 period moving average. So being that at 7:55, we now confirm a change in trend, right? And we don't know how long the change in trend can be. The change in trend can be 1 candle. It can be 20 candles. That's what we don't know. So what we do know is on this gap down, okay, we have 2 levels marked out here. We have this very long wick at 164.36, and we have this gap down high of 163.50. Okay. So we know that in this area, we could be coming into a little resistance. There could be a little bit of supply. With that being said, if we come up to this area and we test it a couple of times and we stall and we cannot confirm that level, I'm looking to cut the trade. Okay. If we come up to this level, confirm, get another candle that pushes higher, I'm more confident that there's going to be a bigger move. We get a push higher, we come back down and kind of test these areas and bounce up. What is the next price target? Yesterday's highs. Okay. Yesterday's highs. So if this is the reason why I'm going to enter the candle or why I'm going to enter the trade, because we were trading below the 20 period moving average. Okay. We were trading below the 20. And now we get our first close over the 20 period moving average. What I'm looking for is a confirmation candle to cross this high. Now you can use the close of the candle or you can use the wick. I will never play a play that has this long of a wick. Okay. That's also, it just won't. It just doesn't show. This is like an indecisive candle here, even though we did make a pop. It's just too indecisive. We have a wick on this side. We have a wick on this side. This is basically like bulls won this battle, but they don't really know which direction they're going. Okay. So I want a small wick. I'll set my line here. I'm going to enter into this play. I'm going to set a trend line here. Okay. And all I'm waiting for is 160.76. As soon as I get that 160.76 break, I'm going to go ahead and take my entry. My stop loss is going to be any close below the 20 period moving average. So you can see as soon as the next candle opens up, we do not take out 160.76. At 8:05 in the morning Pacific Standard Time, we took out that level. This is the candle that I got long in. Next candle is a little bit of a rest candle. We did get a new higher high. Then we got 5, 10, 15, 20, 25, 30, 45 minutes worth of consolidation. Okay. We did not make any newer highs off that high here. Okay. Then we got our second push higher, a little bit more of a ramp up. And where did we start to have trouble? We started to have trouble at this 163.50, and that 163.50 is the gap up pre-market high. You can see we came up, cracked above it, got pushed down, consolidated for 3 candles, pushed again for the second time, got rejected, came back down, consolidated nicely, consolidated at the 20. When this made that third, fourth attempt to crack this 163 and didn't just power through, okay? When it didn't just power through here, that was my cue to exit the trade. So I kind of exited the trade right over here in this area. As soon as we came into the 163.50 the first time, I mean, I could have let it go ahead and tried to crack it. Maybe it did, but with the way that the market is going, all it was to take was this red candle to come down, close here, and then next thing you know, I'm in a losing trade. So I'd rather just take my profits there, take the money off of the table, but that's basically how I set it up. It's not too difficult, but it does require patience, and it does require you to follow the rules. So if you are trading below pre-market lows, you're looking to short. If you are trading in a range like this is in a range between pre-market lows, previous day's high. We also have a little bit of resistance here at the pre-market highs. So you know that automatically we're going to have a little bit of trouble getting over this area. I'm assuming as soon as we get over 164.36 that this does start to trickle back up. There's a gap to be filled at 165, 166, and then maybe consolidate sideways 167, 168. But we're not really looking to do that. We're looking to just scalp a quick move, get in, take some cash. As long as we're trading over that 20 moving average, we're good. Okay. We're looking for candles to be trading underneath the 20 period moving average. We're looking for a reclaim of the 20 period moving average, and we're looking to confirm that high price. This is your entry candle here. As long as we don't break down below the 20 period moving average, we're going to ride this trade. Where are we looking to take profits? Into the next area of resistance. What is the next area of resistance? Pre-market highs from the gap down, 163.50, and obviously this long wick, 164.36. So if we were to break 163.50, I would be looking to take profits closer to 164. Okay, that's just the way that I play it, and that's how simple it's played. Okay, this could have we could have confirmed here. And then this candle could have made a new high and then quickly come down, test the 20, and then we could have broken down below. Then I would be stopping out here. Or if you're comfortable giving yourself a little bit more risk, you would use pre-market lows, which is this trend line here, as your absolute stop. Being that we did come down and touch it one time and we bounced, I would look to, if this move failed, come down, touch pre-market lows, hold this level, and then start to go back up. Okay. But if this entry here failed and we did come up and then we broke down and then we came down to pre-market lows, maybe bounced and then broke below it, this is for sure my stop loss. I am not going to hold it continuing to go down here, hoping that it comes back up here. I'm just not going to do that. I'm just going to cut the trade and look for another setup.